All right, this article is coming from Yahoo Finance by way of Business Insider. Elon Musk's decision to not to pay rent on Twitter's office is adding to commercial mortgage headaches at Goldman Sachs. So Elon Musk's decision not to pay rent is causing pain to Goldman Sachs' commercial mortgage portfolio. We see that delinquency has risen to 612%. So the delinquency commercial real estate loans to 840 million over the first quarter, but this is nothing nationwide. We're looking at 12 billion over the first quarter, making up roughly 30% of bad commercial real estate loans. But Elon Musk, Twitter is not the only ones cutting back on their need for office space, right? Because since the pandemic, many employees have been working at home. Foregoing rent payments appear to be one of the radical cost-cutting measures Musk has implemented at the company since acquiring it last year. All right, so let's get into this other article. This is coming from Wolf Streets. Now, I've been trying to find a way to short the commercial real estate industry, and I may have found my way in. Commercial real estate woes in the stock market, office REITs. So you got Hudson Pacific Properties, and they specialize in office and studio properties in some of the hardest hit office markets. They include LA, San Francisco, Silicon Valley, right? We saw Silicon Valley Bank go under, Seattle. Vacancies range anywhere from 23 to 33%. They announced a cut, pre-announced a cut of this magnitude in the earnings report on May 8th. They disclosed a drop in revenue and another in net losses in a series of quarterly net losses that started in 2020. As you can see, stock did hit a high of, say, close to 40. It's now selling near $5, which is the IPO back in 2010 at $17. This is Boston Properties. It's the largest office REIT by market cap. However, it plunged 63% since the peak of February 2020. It owns the Salesforce Tower in San Francisco, with two older office towers just sold for 70% off the original listing price. That's huge. All right, so this wasn't high at roughly 140. According to the article, it's down there 40. Kilroy Realty Corp is the second largest office REIT by market cap. However, it plunged 66% since the highs of February 2020. This is Cousins Property, the third largest office REIT by market cap. It's plunged 50% since February 2020. And by 82% from their all-time high in August 2000. I've heard of Vornado before. They're the fourth largest office REIT by market cap. Again, they plunged 77% from January 2020. Now, what Vornado wants to do is raise capital by selling off properties. As we've seen, one of the other properties did recently, they sold a couple of their properties, but at 70% off the original listing price. So they own some property in New York City, in particular Manhattan, and using the baseline of recent deals, there's been 3 sales that serve as benchmarks. However, they sold at 50% of the value of 2016 valuation. All right, so the only one I'm interested in looking at is the largest one by market cap, and that's Boston Property. So let's go to the charts. Now we can see from the monthly chart, nice shorting opportunity, Nice shorting opportunity. Beautiful area to short. That was monthly sellers. At 130. We can see $70 was previous support. It did break, and then we had a false breakout to the upside before it collapsed. Now for the past 4 months, we have been basing. Which means that the momentum to the downside has slowed. And we can see that the current candle, June, is green. And will probably close green with roughly 10 more trading days. All right, so what we can see is that this week's candle appears to want to close green, which would also signify a close above the range, which is bullish for holders of Boston property. If price can resume its upward momentum, look for it to close the gap near $57. Let's go to the daily chart. And we can now see as price was coming down, prices were below several moving averages. During the sideways price action, the moving averages have converged and stacked upon one another. And now we see price since the beginning of June breaking above the moving averages. We also see the moving averages starting to point higher. So this is bullish. This is bullish. Looks like I missed my opportunity. Now, one thing to note is that within the next 2 to 3 years, roughly a little over $1 trillion of commercial debt is going to mature. And if because of the interest rates being this high, the value of those that debt is drastically less. So unless refinancing can be taking place, it spells bad news for the commercial real estate market. Nevertheless, it looks like I missed my opportunity. Maybe I have to wait a while. There's mixed messages on whether we are approaching a recession, in a recession, or in an expansion, thanks to AI. But for me, they'll have to just look for other opportunities that give me a better reward to risk ratio. Thanks for watching. Subscribe. Please like the video.